Welcome to the Investors Trading Academy Weekly Wrap-Up. In the week ahead, traders will keep an eye on the following events. The highlight of the week will be the second estimate of the first quarter GDP numbers for the United States. Now remember, Monday is a holiday in both the United States and the UK, so some volume will be very light, and a lot of U.S. data, including weekly crude and natural gas inventories, will be delayed a day by the holidays. On Wednesday, U.S. April durable goods are tipped to fall 0.2%. The S&P Case-Shiller Home Price Index for March is due. Marquette will release its flash services PMI report for May, and May Consumer Confidence Index is also expected. In China, April industrial profits will print. On Thursday, in the U.S., weekly mortgage applications will come out. Rounding out the week on Friday, the second estimate of first quarter GDP is expected to fall to 0.6%, while April pending home sales, weekly jobless claim data, and the Bloomberg Consumer Comfort Survey are also all expected. In Japan, April CPI data is due. Late Friday in the U.S., personal income and spending data will be released, ending the week as we go closer to the end of the month. It was a good week on Wall Street, with all three indices finishing in positive territory, led by the Nasdaq's more than 2% gain and the S&P closing at a record high above 1900. Hewlett-Packard is enjoying a nice rebound with a 6% pop on Friday. The tech giant fell Thursday in late trading. In an apparent error, the firm released its earnings report prior to the closing bell, which included plans to cut 16,000 more jobs on top of the previously announced 34,000 jobs. On the international front, traders were keeping tabs on the geopolitical developments. Speaking Friday at an international economic forum in St. Petersburg, Russian President Putin warned of a dangerous civil war in the Ukraine as fresh violence erupted ahead of this weekend's presidential elections. But still, European markets managed to finish in positive territory for the week. In the foreign exchange markets, the U.S. dollar was the best performer of the week, touching a 2014 high and closing the week at 80.44. Investors' worries of slower growth in Germany drove the euro to a 3-month low on Friday against the dollar. The common currency weakened after a measure of business sentiment in Germany came in below expectations. Weak economic data added to investors' expectations that the ECB would take measures to ease monetary policy at its next meeting in June, which would weigh heavily on the euro. The euro closed the week at 136.32. The euro lost 0.2% against the dollar, its lowest level since February 13th. For the week, the common currency had fallen 0.7%. The euro also hit its lowest against the UK pound since December 2012. The dollar rose slightly against the yen after Bank of Japan Governor Kudura voiced concerns over the yen's strength in a Wall Street Journal interview. The dollar traded at 101.97 yen, up 2% on the day. Moving to the commodity space, gold ended the week lower on the back of better than expected data on new U.S. home sales and the strength in U.S. equities, prompting prices to tally a mild loss for the week. Gold pulled back to settle at $1291.70 for a modest decline of 0.1% on the week. Oil prices rose following positive U.S. manufacturing data, which supplied support by boosting optimism in the future oil demand. Crude oil ended the week over $104 a barrel, while Brent oil added 12 cents to reach $110.48.